Ever wondered what fuels the engine of Bybit and allows you to trade your favorite crypto with such speed and efficiency? That engine, my friends, is market depth, and in the next minute and a half, we're going to dissect exactly what it is within the Bybit ecosystem. Market depth essentially illustrates the liquidity available for a particular asset, in our case, cryptocurrency, at various price levels. Think of it like this: Bybit's order book. That's the visual representation of market depth. On one side, you have the bids. These are the buy orders placed by traders who want to purchase a crypto asset. Each bid shows the price they're willing to pay and the quantity they want to buy. On the other side, you have the asks, or the offers. These are sell orders, showing the price at which sellers are willing to part with their crypto and the quantity they're offering. The closer the bids and asks are to each other, the tighter the spread. A tight spread indicates high liquidity, meaning your orders are more likely to be filled quickly and at your desired price. A wider spread suggests lower liquidity, potentially leading to slippage, where your order executes at a less favorable price than anticipated. Bybit visually represents market depth through a depth chart, often displayed alongside the order book. This chart shows the cumulative volume of bids and asks at different price points, giving you a quick snapshot of where buying and selling interest is concentrated. Understanding market depth empowers you to make more informed trading decisions. It helps you gauge the potential impact of your orders, manage your risk, and even anticipate price movements. So, next time you're trading on Bybit, remember to glance at the order book and depth chart. It's your window into the underlying liquidity and a crucial tool for navigating the crypto markets successfully.